Welcome back to our YouTube channel, KC Accountancy Education Center. And today we want to continue with our tutorials. And today basically we want to look at the performance of the firm, the financial performance of the firm, because I told you we are going to start by first analyzing the ratios. Then we go to corporate restructuring, we go to Islamic finance, we first handle the ISM marks, and then we proceed to the following topics as we highlighted in our overview of the course of the paper in the previous lecture. But before we look at the financial performance of a firm, I want us to finalize with the introductory part. We first look at what do we need for this paper, or what are the things should we equip ourselves with when we are going for this paper. So let's try to look at the tools to be used in the paper. In other words, in these whole tutorials, what do you need to have as the basic things that you should be having for you to be able to excel or to pass this paper with good marks? So I expect that every student at least should have latest past papers, and the past papers you should have, they should be ranging from, I think, November 2018 to date. Just have the listen, because given the fact that the syllabus was revised, and the other thing that you need to note is that you are supposed to have the listen past papers. These are going to be past papers, but you also make sure you also get and their marking guides or solutions, at least from November or May 2018 to date. So if you get those past papers with their respective solutions or marking guides, I know some marking guides have some errors, but we shall be able to highlight some of these aspects as we go on, but have those with you. And that's one. Then the other thing that you need to note on these past papers is the fact that we have a new examiner. The previous past papers we had a different examiner. So the old examiner started those papers that from November 2018 to I think August 2019. These were for previous examiner. So the new examiner is starting from November 2019 to date. So we want to utilize this. The reason that's why we are picking some more, at least we are picking some more past papers from the previous examiner to see how this person was actually setting these aspects. But if you try to compare and contrast, you'll be seeing some small difference in how the old examiner used to examine the paper and based on how the new examiner is doing it. So this November 2018 to 2019 to date will give you some challenge. It will make you understand, because previously things were a little bit direct, but they were not all that direct, but they were somehow direct. But here the things are not all that straightforward, but they are easy to understand as long as you understand the concept. So the older past papers below November 2018 were not all that hard. So even if you try to compare, if let's say you compare numbers of 2018, let's say June 2018, and you compare them with the numbers of, let's say, September 2022, you will see that they are totally different questions. I know that given the fact that the syllabus was about to change, but there are some slight differences as we shall be able to look at. So we want now to focus on the financial performance. Financial performance of a firm. Financial performance of an organization. So, financial performance, it's a topic that it remains a little bit silent in this new syllabus. It's there, but it's hidden. It remains a little bit silent in this new syllabus. And this new syllabus, it talks about it very briefly, where under the financial markets. If you look at that detailed syllabus, financial markets, that's where it was brought. And it is a little bit silent. And the way they brought it, it's as if you're just going to be using what we call the use of market ratio, use of market ratios. So when you try to look at that detailed analysis, under the financial markets, you'll be seeing use of market ratios in financial decisions. So it is a concern that we can see, but it is a bit hidden. In other words, the examiner is only talking about the market, these market ratios, because we know that is only talking about the market ratios and is ignoring other ratios. Is talking about market ratios in a sense that these other ratios, we did them on our level 2 financial management, but on the advanced, because the market ratios on level 2, we don't look at it in detail. We always focus on the detailed analysis of these other ratios, but we give out the we talk less on the market ratios, and that's why the examiner is bringing them here, only market ratios. But that doesn't mean that he can't examine other ratios, and that's why we can't trust the examiner to say that we are not going to revise the market ratios, because we have some numbers that happened, especially in the previous syllabus. So they are talking about market ratios because the examiner expects us to be knowing the other ratios, because those other ratios, we talked about them in our financial management. That is a paper on level 2. But that doesn't conclude that the examiner can't bring a number on ratios. In the old syllabus, we saw the examiner examined the ratios September 2022, question 2. That's when we started to see those numbers coming up. And this number, actually, majority of the students didn't do it because it came as a surprise to them because they never expected it to appear. They thought it is a paper that it's a number that is supposed to appear in the financial management paper on level 2. So when we are doing these ratios, we make sure that we analyze the performance of the firm. We look at all the ratios. So I'm going to try to teach it in my own perspective, but just nothing much I'm going to communicate, because these are some of the things that you already know. We are just going to have a recap on what should be done. But what you have to understand is that we want to start with financial performance of the firm, and I'm going to teach it in my own perspective. And after this, then we shall look at corporate governance. So I want you to kindly note that, because it's something that is going to be of more important. So let's look at, we know that those financial ratios, the ratios, they are within the topic of financial analysis. So when you are told to do financial performance of the firm, to evaluate the financial performance, you're supposed to use ratios. So when you want to analyze the performance of any company, we shall use, it is always, we use ratios. Even though there are other methods that we can use to analyze, there are other methods. The other methods that we have that analyze the financial performance. We have the short analysis. These ones can also analyze. We have the pastel. We have the Boston Consulting Group, BCG. We have Porter's 5 forces. These are things that you will have in your business strategy paper. That paper about leadership. That's where some of the things you will be in. So we don't use, even if you can analyze the business using these tools, we always analyze ratios. The reason why we are analyzing using ratios is because here we are basically looking at the financial aspect. So we use ratios to analyze. But now, when you are dealing with ratios, ratios are divided into 5 categories. 5 categories of ratios. We have 5 categories of ratios where we can analyze the profitability of the company, where you can analyze the liquidity, where you can also analyze the gearing of the company. The fourth one is the investor ratio, or what we call the investment ratios. And these investor ratios, or the investment ratios, these are the ones the examiner is calling the market ratios. And this is where the syllabus is focusing on these ones. The market ratio. But the last one, or the last category that we have, is what we call the efficiency ratios. And this looks at how efficient are we managing our working capital. So this one is basically more on working capital management. And we know that on level 3, of course, we don't go so much into the aspects of working capital management. Those are done on level 2, financial management. But here, the working capital, we don't talk about much about it. But that doesn't explain the fact that the examiner can't ask them, because he knows you studied these things on level 2. That's why these papers are interlinking. They also have exemptions that you can't do financial management and at the same time you do advanced financial management at the same time. It is impossible. They don't allow it. Just like the same way you can't do taxation on level 2 and at the same time you are doing advanced taxation, because most of the times the papers may be set at the same, they may be done on the same day. These people on level 1, on level 2, they are doing taxation, and also at that same time, the one is on level 3, they are doing advanced taxation. So you can't be here and at the same time you be the other side. Just like the way you can't do financial accounting at the same time you are doing financial reporting, or doing financial reporting and at the same time you are doing advanced financial reporting. So those are some of the things that you have to be careful with. Even though it's not all that in the syllabus is only talking about these market ratios. And the reason why they are not talking about these other ratios is because we looked at all these profitability ratios, we looked at liquidity ratios, we looked at gearing, we looked at efficiency ratios on level 2. Even these ones, we mentioned them, the market ratios, but we didn't go much into details. So here, the syllabus wants us to have a detailed analysis on those marketing ratios. So that's basically what the examiner will be targeting. And most of the times here, they don't They may not tell you to compute, they may not specify that you compute such and such ratios. They may just tell you evaluate the performance of the business, write a report based on the information given above, trying to evaluate the performance of that business in the question. And it will be upon you to look for the ratios that are falling into these 5 categories that we have. Maybe you give like 3 here, 2 here, 2 here. Let's say even here you give 2, even here you compute like 3, and you make a decision. You don't just compute. You have to defend your answers. You remember, we said for ratios you must explain your results. So, what do we need to do when we are handling any number on ratios? So, we want to analyze, we want to look at when we are analyzing resources, when we are analyzing ratios, what do we focus on? We don't simply compute ratios. When we are analyzing ratios, we compute, and at the same time we do what we call either a trend analysis, or we can look at the performance, how maybe the performance is based on the industrial average, based on whichever information that they have provided for us. So we don't simply compute ratios. You compute, then we also do what we call trend analysis. So we compute the ratios, then you go ahead and do a trend analysis, and by trend analysis, because of course you compute, let me just be methodical. You compute the ratio, then you also come and do trend analysis, basically. And when someone talks about trend analysis, you look at the performance of the company. You compare the performance of the company, maybe for a given year, maybe for this year one, let's say this is 2020 to 2023, or 2021. Then this one is 2019. So you keep comparing the performance of 2019 with that of the preceding year. If this one we had 20 million and this one we have 25, it means there has been an increase of 5 million. That's what we call a trend analysis. There has been some improvement. If this has been maybe 15, but this one is 10, then it means there was a decrease in the performance of the company. So when someone talks about a trend, you look at the performance of the company, maybe this year, in line with the different years. If this one, maybe this one came to 22, maybe this one went back maybe to 30 million. So you'll be seeing that this one, they performed better, they reduced, but again, they rose up. But here they performed, increased, but here they went down. So that's what we are trying to look at. What is the general picture of the performance of the business? Has it increased or has it reduced? So we look at either there is a growth or there is a decline. So basically, when you're trying to look at trend analysis, you are looking at a growth or a decline. And this is how you will be explaining. You based on either the decline or the growth to make sure that you make a conclusion. So that's one aspect. That's one way of how we can analyze ratios. The other way the second approach that you can do analysis of the performance of the business, or analyzing ratios, is we can look at the performance. We can look at the performance of other companies in the similar industry, in the same industry, and then we make a comparison, and then we make our comparison. So for example, we look at the businesses that are within the same sector. Let's say maybe we are trying to analyze the performance of, let's say, communication sector, media houses. Maybe we have, let's say we are in communication industry, and we pick out two companies. We can look at MTN Group, and then Airtel company or group. So we try to look at the industrial averages. We look at the industrial average. If you are the accountant in MTN, you try to look at what is the industrial average of the whole sector for communication. You compare that with how you are performing to see your performance vis-a-vis the industry. If it is a manufacturing company, you look at maybe Kakira Sugar. You also compare it to maybe with Rugazi to see how that sugar manufacturing is moving. So we may have these industrial averages as our benchmarks. We have those as benchmarks for us to be able to analyze our performance. So just like the way I've said, you can look at MTN Uganda, you can compare yourself with the industrial or the sector average. The sector averages will be, of course, given to you if at all they want you to look at the performance based on the industrial averages. And most of the times these companies, they compare. If at all you have to make a comparison between two companies, they must be at the same, at least almost the same level, but they must be in the same industry. You can't compare a manufacturing company with the communication media house. It will not make sense because they will be having different risks. But the reason that's why we are looking at the industry is because we expect that all companies that are within that sector, they are facing the same business risks and other kind of risks. So the third way that we can analyze ratios, the third way could be, we may find ourselves that we are not comparing. You don't compare industrial average. You don't compare industrial, or what we call the sector averages. You don't compare the industrial or sector averages. And you'll find yourself, maybe you could look at a company in the same industry, a company in a similar industry. It's different from the one where you are using the industrial average, because here you'll be going by MTN, Airtel, and MTN. You compare the performance of Airtel vis-a-vis the performance of MTN. But with industrial averages, you just compare. You have one company, let's say Airtel, then here you have the industrial averages that you are comparing against. So you are comparing your performance with the industrial averages. But here we compare company with company, and this company, they are supposed to be in the same industry. And these companies, the other thing is the fact that they are supposed to be of relatively equal size. If I'm comparing Rugazi Sugar Company and I'm comparing it with Kakira, but you can't compare a startup company with a company that has been there in existence for so many years, especially when this company has just started and it hasn't accumulated anything. Now, at the end of the day, these are the three ways that we can analyze ratios. But at the end of the day, the examiner wants us to write a report. As I said, we basically look at a report. At the end of the day, the examiner will require us to write a report explaining maybe the performance of the business. So you will start with the report, you will write the report based on the computations. Of course, you will bring the computation after writing the report. Now, someone is going to be wondering, what should I be doing, or what should I put in the report? Of course, in the report, you will put the computations, you will just bring in the results. You will put the computations as your workings, as attachments. Of course, we know that attachments, they are going to be in the appendices. We explained how we'll be able to do a report and a memo in our videos. So, but what you should know is the fact that if you are going to be writing a report and you are going to be dealing with ratios, the first step is to do the workings. And these workings, because you need workings that you are going to reference your results to, the report will be a brief aspect. But when you're analyzing your workings, these workings are going to be in three ways. You follow these modules or these three steps. Number one, you state the ratio and its formula. Number two, you compute the ratio. Number three, you interpret or you comment on the results. You don't just compute. So whenever you are talking about ratios, you are supposed to do them in this, using these three steps. So some students, they just compute and they don't comment. So if you end on computing, you will be not, it doesn't mean that you are going to be marked wrong if you stop here, but you will not get this one extra mark for commenting. Even if they don't tell you that you comment, for ratios we comment. Commenting carries at least 1 mark. And we've said that when you are commenting, you are just trying to do a trend analysis, just explaining whether there has been a growth or a decline. And that's all that you need to understand from the financial analysis or ratio analysis. And that's the recap I wanted us to get. I'm not going to go into giving the formulas. We shall just do numbers because I expect that you'll be knowing the formulas. But get the other aspect that here, the examiner will not specify which ratios to compute. Most of the times, the examiner just tells you, assess the performance of the business or assess the financial performance of the business based on the information given above. So you'll find yourself you have to group these ratios into those 5 categories, and then you make computations. So that's basically what I wanted you to understand. The rest is just all about doing numbers. The same way we've been doing numbers is the same way that we are going to do them here, but that's some small analysis I wanted you to have. So the other topic that we are going to look at is going to be the Islamic finance, but this is going to be in the next video. Islamic finance, it's a new area on level 2, but here we've been having this Islamic finance even in the old syllabus. So want to look at Islamic finance, but we are going to do that in the next video. So don't forget to subscribe. Make sure you turn on the notification bell icon so that you can be able to get notified whenever we upload new videos. Don't also forget to share to your colleagues so that they can have the same benefit that you have received from the channel. Thank you for watching. Until we meet again, bye for now.